The payroll numbers are out this morning, and they were a huge beat. The expected non-farm payrolls was supposed to be 250K. It was actually 372K, and the private payrolls are supposed to be about 275,000 jobs added, and actually 381,000 were added. And what I've got up on the screen here is a chart of the Nasdaq on a 15-minute time frame. This is where the news came out. The market has dropped pretty substantially on that news, and you may be asking yourself why. That sounds like a very positive news. It is positive news for the overall health of the economy, but the market is taking a look at is what the Fed is going to have to do. So bad news equals the Fed will back their foot off of those rate hikes, which is good for the overall market. Good news means the Fed is likely to continue with those aggressive rate hikes. And so this is one of those times where good news is bad news and bad news is good news for the overall market. At least that's the reaction that we've seen so far. Now, that move right here, I want to back this up and I want to look at this in on a daily time frame. It's very small. We had a very strong week. From the low of the week, the Nasdaq's up about 7% off of the bottom, coming back in a little bit, and I'm going to put this in on a weekly time frame so that you guys can see this more clearly. We haven't accomplished anything when you look at this on a weekly time frame, right? The market has traded for the last 3 or 4 weeks inside this range. We've made no higher high. We've made no lower low. Nobody is really in control here, right? We had a nice strong bounce the first week. The Nasdaq gave all of the move back the next week, and this week we've made that move back up. We need to get out of this range one way or the other in order to determine who has control in the short term. So the Nasdaq needs to take out last week's high for the bulls to have a chance to make a higher high around that 13,000 level, or it needs to take out the low from a couple of weeks ago to give us that potential move to the downside. We'll jump in and we'll take a look at the rest of the indexes. They all look very similar here. The S&P 500, again, we had that big, strong down week. We had a huge reversal to the upside. We gave a lot of the move back. We've made that bounce back up. We're just trapped inside this zone, right? Under 3,600, bad things happen. And if we can take out really that big round 4,000 level, we can start to attack that last key high on the S&P 500 around 4,200. We come in now, we take a look in at the Dow. Same type of price action here on these weekly candles. Big move down, huge bounce up, gave a lot of it back, bounced back up, trading inside that range. Major level 33,000 and 29,000. So above 33,000, things look really good. Underneath 29,000 certainly does open the potential for some further sell-off. The Russell is trading at a major key important zone, right? We've talked about this before. We got 2018, 2020. We got that bounce off of that 1,700 level earlier this year. We broke below it. We have not been able to hold below it, and there is a huge battleground that's taking place right here at this 1,700 level, right? Same price action, big down, big green, gave it back, moving back up, trading inside that zone. Big level at 1,900, huge level at 1,700. Above, things look good. Below, things look really poor. So those are the levels to really continue to pay very close attention to. When you look at this on a daily chart here over the last couple of sessions, we've had those nice runs in the indexes, but when you compare it and you back the chart up and you look at it on a weekly time frame, even though this week was a nice big green week, we've accomplished nothing. We're trading at the same point that we were 3-4 weeks ago in a lot of the indexes, right? The S&P 500 is trading at the exact spot that it was trading at the beginning of June. We've just had a lot of volatility to essentially go nowhere. When we look at the major levels that are on the chart, this is a very important zone. We've talked about it a lot. Market really needs to hold here. But as you can clearly see when we're looking at this all year long, it's just a downtrend, right? That has not broken yet. We've talked about in some of the other videos, some of the areas of the market that were beat up a lot more than others, like growth, have stopped making lower lows, look like they might be trying to turn the corner. There could be some bullish divergences in play, but at the end of the day, price action has to prove it to us. We need to see these downtrend lines break. We need a higher high in play. Above 4,200, the conversation that this could be a bottom becomes very valid. At this moment in time, it's just sitting on a major level of support, but the bulls have done nothing to prove their case. At the same token, we have seen the U.S. dollar continue to rip higher. that is a headwind for everything priced in US dollars, right? As the dollar gets stronger, everything that's priced in dollars has difficulty continuing that upward movement, right? It doesn't mean that we can't go higher. It's just a headwind. It makes things more difficult. And the dollar has made that multi-year break, and it was a decade-long breakout here to the upside, and has really followed through here over the last week or so. What happens over here at the US dollar is really, really important. I'm going to back this chart up from my weekly time frame down to a monthly time frame so you can get all of that price action from the early 2000s in on the chart. And you can see right in this zone at about 112 all the way up to this 120. This is that multi-year topping pattern before the dollar rolls over in 2002. We're coming up down towards testing the underside of that zone at that 112. And what happens here is going to be very, very important on the long time frame chart of the US dollar. A rollover here would put this resistance zone still firmly as that overhead resistance zone, and a move up above it would really be something spectacular for the US dollar. And we've talked about this a lot. When you take a look at the size of this range that we've traded in for the last 10 years, and you go and you put your fib target on here from that breakout spot, you get that 120 upper end of this resistance zone as that potential target on a monthly time frame. This is something that would take place over the next year or two, right? This is not something that's going to happen overnight. But you can see other periods of time when the dollar makes its run, it can run for a prolonged period of time. So we're watching this a lot, very closely, because it is really, really important to the way in which things are priced. The last couple of areas that we want to talk about here that you guys can pay attention to into next week, we'll talk about oil. Oil at that 110 zone is really that major long-term, price action resistance zone that we saw from 2011 and 14 ultimately is where it ended up failing. Right, we pushed up above. We didn't have any monthly closes really, maybe like a day or so above that level, and we've fallen back underneath of it. There is a ton of price action right here. Now, the bulls have not lost control of this yet, right? You can look at this, and I'll zoom in on a daily time frame so you can see it a little bit more closely. This really is just a range that we've been trading in here for the last couple of months. It's a really big range, right, with 94 on the downside and 130 on the upper end of this range, right? Underneath 94 and this area of support is gone, and that could ultimately say that this 110 to 116 was a multi-year resistance kind of topping pattern in on oil. 94 is the key level to watch on the downside, and a close back up over 116 is the key on the upside. The last area I want to pay attention to is copper. Now, copper's had a huge bounce here over the last day or so after this just straight waterfall decline from 460 all the way down to 330. We got a nice bounce here of 2 sessions from the low of almost 10%, 9% or so. Where did it pull back to? I'm going to back this again out in that monthly time frame so that you guys can see it. The last cycle high was right here at 330, right? So we had this long downtrend that was in play from 2010 to 2017. Copper started to make its move back up, ran right into this 330 zone, and that's where it failed. We ultimately made that breakout, and that is now acting as that area of support, right? This is a perfect example of a previous area of resistance becoming an area of support. Underneath 330, copper no longer looks good because the next real level of support really is all the way back down on a long time frame, is back down at that $2 level, right? You can look at this as potentially marginal breaks or a multi-year potential double top. There's a lot of different ways to look at this chart. The bottom line, 330 is a major key. We came down, we tested it, we held, and we made that strong bounce. What happens here is really, really important. Bulls really need to get this back up over about that 390 zone, and we pay very close attention to copper because copper is one of those base metals that's used in a lot of building, and it has typically been a pretty good indicator of economic expansion or contraction. And the way this has behaved here over the last couple of months certainly looks like the copper market is pricing in that recession. All right, so watch that 330 next week and watch 390. I hope you guys have yourselves a fantastic week next week. I'll be back the week of the 18th. Thank you guys so much. If you find this information useful and you want to reach out and have a conversation with me, feel free to reach out to M. Tedeschi at Perspective Wealth Planning or 814-580-9881. Hope you guys have a great weekend. Take care.